What if the world is quietly plotting to ditch the dollar, unbeknownst to most? Headlines and online chatter have recently teased a secret agreement ready to topple the petrodollar and strip the US of its reserve currency status. Imagine waking up one morning to find oil priced not in dollars, but in a new currency, sending shockwaves through global markets. In this report, we examine the facts behind the rumors. We'll trace the origins of the petrodollar, the current data on the dollar's dominance, and the real deals, currency swaps, BRICS initiatives, and oil for yuan experiments that are stirring concern. By separating hype from reality, we can judge whether an endgame is actually unfolding behind closed doors. The petrodollar concept has fueled much of the intrigue. In the early 1970s, the United States and Saudi Arabia struck a clandestine understanding that linked U.S. security aid to Saudi oil revenues. In practical terms, the U.S. agreed to buy Saudi oil, and Saudi Arabia agreed to reinvest its dollars in U.S. treasuries and arms purchases. However, there was no treaty forcing all oil to be sold only in dollars. As economists note, dollars became the standard oil currency largely by default. It was the world's largest economy's money rather than by law. In fact, Investopedia explains that narratives of a binding petrodollar pact have been debunked. The 1974 agreement was secret until much later and never mandated exclusive dollar pricing. In reality, the petrodollar system was simply oil exporters earning dollars, petrodollars, and recycling them into U.S. assets, which helped finance U.S. deficits. No formal petrodollar treaty. Fact-checkers have found no evidence of a binding U.S.-Saudi oil for dollar deal. The 1974 U.S.-Saudi alliance was secret, but did not oblige Saudis to sell oil only in dollars. Dollars built-in demand. Because oil was priced in dollars, exporters amassed dollars, petrodollars, and invested them in U.S. markets. This recycling sustained dollar demand, reinforcing its status. Myths versus reality. Recent media hype that Saudi Arabia let the petrodollar expire was false, even though Saudi Arabia said it's open to new ideas like yuan-denominated oil sales. Experts emphasize that oil has continued to trade mostly in dollars worldwide. The dollar's dominance today, so how dominant is the dollar now? The truth is that the dollar remains preeminent, even as its share has slowly slipped over decades. Official IMF data show the US dollar still accounts for about 58 to 59% of global foreign exchange reserves. By comparison, the euro is roughly 20%, and other currencies yen, pound, renminbi, each hold only single-digit shares. In trade invoicing, the picture is similar. About 40% of world trade is billed in dollars, far more than the US share of world GDP. In short, although the dollar's reserve share has fallen, it was approximately 72% in the 1990s. It remains far above any other currency. Analysts stress that talk of an imminent collapse is exaggerated. A Reuters analysis notes that after 2 decades of gradual erosion to less than 60%, recent global trends have even begun to reverse dollar losses. Surveys of central bank reserve managers find a net increase in planned dollar purchases. 80% of respondents now intend to boost dollar reserves, versus only 6% last year. As one currency expert observed, the dollar's dominance is so strong, there's no powerful second currency ready to replace it. In practice, no competing currency or system yet offers the liquidity, convertibility, and depth of the dollar system. As a result, most official forecasts see de-dollarization as a very gradual process. Nonetheless, cracks are appearing. Countries and companies are cautiously experimenting with alternatives, driven by geopolitics and a desire to sidestep U.S. sanctions or fees. These efforts fall short of a secret overnight shift, but they illustrate the undercurrents of China's currency swaps. The People's Bank of China has signed dozens of bilateral swap lines. However, these are bilateral swaps, not a multilateral drop of the dollar. Analysts caution that such mechanisms do not yet threaten the dollar's primacy, since no fully global alternative exists. Renewables and tech. Some visionaries note that a long-term shift away from oil toward renewables or EVs could reduce petrodollar flows, but that trend plays out over decades, not overnight. BRICS and currency alternatives. Another major angle is the BRICS bloc: Brazil, Russia, India, China, South Africa, plus new members. At the 2023 summit, BRICS expanded dramatically, inviting Saudi Arabia, UAE, Iran, Egypt, Ethiopia, and Argentina to join. This move adds heavyweight oil exporters Saudi, UAE, Iran, and other emerging economies into the club. Some see this as a geopolitical signal. Even traditional US allies like Saudi and UAE are drifting toward the emerging world and exploring de-dollarization options. BRICS leaders have indeed discussed using national currencies in trade. The diplomat notes that BRICS Plus explicitly stated an intent to dump the US dollar in their bilateral transactions and aim for a more diversified monetary system. In practice, proposals have ranged from a shared BRICS currency, sometimes nicknamed the BRICS coin, or unit to blockchain-based payment networks. However, these ideas remain mostly at the proposal stage. Even BRICS officials have tempered expectations at a 2024 summit. Putin held up a prototype banknote but immediately reassured everyone that BRICS was not fighting the dollar. Rather, they want alternatives if the dollar is weaponized. Notably, India, which hosted the 2023 summit and chairs BRICS in 2025, has been cautious about any common currency, preferring bilateral arrangements. BRICS expansion does create new pressure points, new members, big oil, the addition of Saudi Arabia, UAE, and Iran with some of the world's largest oil and gas reserves means the group now collectively covers approximately 24% of global GDP. Any unified decision by these producers to price oil in a currency other than the dollar would be momentous. For now, however, no OPEC or BRICS-wide commitment has been announced. Payment mechanisms. BRICS countries are working on payment platforms, the so-called BRICS Pay and China's cross-border interbank payment system to settle trade without SWIFT. Yet these platforms are in pilot stages. Experts note that no rival payment system or currency has the scale to instantaneously replace SWIFT dollar for global trade. Digital currencies. China's digital yuan trials and Russia's similar efforts could eventually facilitate cross-border settlements, but they are far from universal. US officials watch these developments nervously. Even former President Trump warned BRICS that trying to dethrone the mighty US dollar would invite harsh retaliation tariffs and loss of market access. In short, BRICS moves have raised eyebrows, but a coordinated plan to quickly kill the dollar is far from clear in the public record. Oil and trade in other currencies. Perhaps the most tangible sign of change is how oil and commodities are bought and sold. Traditionally, nearly all oil was paid in dollars, but lately a growing minority of deals use other currencies or barter. India, UAE rupees. In August 2023, India's oil corp paid 1 million barrels of Abu Dhabi oil in Indian rupees. This was enabled by an India agreement signed July 2023 to let bilateral trade settle in rupees instead of dollars. India's government says it plans more such local currency trade pacts. India, Russia, rubles. With Western sanctions on Russia, Indian refiners have bought Russian crude in Indian rupees, UAE dirhams, and Russian rubles. Reuters reported India paid for most of its Russian oil purchases in currencies other than USD, China, Middle East yuan. China has made limited yuan-denominated energy deals. Notably, in early 2023, China's state oil company used yuan to pay for about 59,000 tons of LNG imported from the UAE. Also, Chinese President Xi announced plans to buy oil and gas in yuan, though he noted China has not yet actually used yuan to buy Saudi oil. Small experiments like these signal openness to renminbi trade. Russia, China, yuan, rubles. Russia now settles most trade with China in yuan or rubles. In fact, one report found the yuan has become the single most traded currency in Russia, surpassing the dollar. Other commodities. JP Morgan noted that in 2023, at least 12 major commodity contracts were settled in currencies besides the dollar, up from 7 in 2022. Examples include oil for rupees deals in the UAE and bilateral currency swaps, the Saudi-China 50 billion yuan swap. Overall, financial firm Oilcom reports that about 20% of global oil trade in 2023 was invoiced in non-USD currencies. This is the highest share ever, but still only 1/5 of the total. For now, most oil is still sold in dollars because buyers and sellers default to the most liquid and accepted currency. As PolitiFact notes, sales of oil in US dollars are expected to continue. Secret agreements or open plans. So what about that secret agreement to end the dollar's reign? Despite sensational claims, investigators have found nothing concrete. Fact-checkers at PolitiFact and Politico have debunked viral posts stating that Saudis halted a 50-year dollar pact. According to these sources, no new oil setting arrangements outside the dollar have been formally announced. In fact, No hidden oil swap treaty. PolitiFact interviewed oil market analysts who said absolutely no credible proof exists of any secret US-Saudi decision to drop the dollar. The original 1970s deal was about US security and mutual investment, not a binding pricing clause. Public declarations. All known agreements, currency swaps, joint ventures, etc. have been public. For example, Saudi Arabia and China signed a 50 billion yuan swap line in November 2023 to boost yuan trade, a big number, but fully transparent. No official has admitted to any undisclosed oil for yuan deal beyond such swaps. Cautious rhetoric. Even Saudi and Chinese leaders tread carefully. Saudi Arabia, as industry minister, said the kingdom is open to new ideas like yuan settlements but did not commit to them. President Xi said China aims to buy more oil in yuan, yet candidly noted that so far none of Saudi oil has been paid in yuan. In summary, there's no published secret endgame treaty. What is happening is overt. Gulf and BRICS nations are exploring diversification. They have bigger fish to fry than colluding on a sudden dollar collapse. As one researcher noted, these moves reflect the possibility of a post-dollar world, but no actual pact has been revealed. What if the dollar fell? Let's assume, for argument's sake, that the dollar suddenly lost its reserve status. What would happen? Analysts warn of a global shock. A recent Chatham House study argued that if the dollar's status abruptly deteriorated, US borrowing costs would sharply rise, and China would find it far easier to push the yuan globally. In practice, dropping the dollar would mean a loss of its exorbitant privilege, the ability to finance huge deficits at low cost. The Atlantic Council estimates that reduced dollar dominance would fragment markets and raise volatility, leading to higher inflation worldwide and force the US to make painful spending cuts. In short, such a shift would be extremely concretely, foreign investors might demand much higher interest rates on dollar debt if the currency became unreliable. The US government would face surging debt servicing costs, likely triggering belt-tightening or default risk. Global trade and finance networks built over decades on the dollar would splinter as each country retreated into its own currency bloc. None of the research suggests a smooth transition. Even modest trends are considered disruptive. More fragmented FX markets and lower confidence in liquid asset markets. That's why many economists caution that the dollar's fall cannot be sudden. Changing the reserve currency would be a painful revolution. A steady years-long process of diversification is far more likely than an overnight coup d'etat. As Reuters columnist Jamie McGeever observes, for the dollar's share to fall, another currency's share has to rise, but which truly global currency is there? Today, there really is no ready-made replacement. Conclusion. How close is the endgame? Despite the hype, the evidence suggests we are not on the brink of the dollar's collapse. At least, not overnight. No secret backroom deal has been found that would immediately append the official data and expert analysis show the dollar holding firm as the world's main reserve and trade currency. Central banks still overwhelmingly favor the dollar for liquidity. At the same time, the quiet signs we've reviewed, BRICS expansion, growing bilateral currency swap lines, and selective known USD oil trades are real. They reflect a gradual realignment. Emerging economies and exporters are hedging against US dollar risk, but these moves are incremental. For example, the India-UAE rupee oil purchase and the China-UAE LNG yuan deal show growing trust in alternatives, yet together they cover only slivers of global trade. The vast majority of oil is still paid for in dollars, and most countries keep their reserves in dollars by choice. In narrative terms, consider two possible endings. Optimistic. The rumor of a secret collapse plot turns out to be overblown. The dollar remains strong, with only gradual diversification. US and allied policies adapt to maintain confidence, and the multipolar world adjusts over years. Pessimistic. Key players quietly coordinate a new currency system. Over the next decade, oil pricing shifts to a petroleum or other basket, and central banks diversify rapidly. In that case, the dollar's reserve reign could indeed end, but even then, it would likely be due to a series of open policy changes, not a hidden handshake. For now, all facts point to a more cautious outlook. As one analysis put it, the petrodollar system's demise is not looming, and the US dollar's strength remains secure. But history is not guaranteed. We will keep watching for any real shifts, overt or covert, that could rewrite the rules. The petrodollar may not face an immediate assassin, but its future will be decided in the coming years through the sum of many small moves.